What's up? Today, as you can see that I'm finally back to my place. Notice the difference in background from my last video. Today we are going to learn how to short assets like BTC or Ethereum uh, by using our wallets using protocols that are on the chain. So we'll be using Polygon Matic network, to short today either Ethereum or Bitcoin, depending on what I feel like, and I'll show you how to do that and how you can actually make money shorting assets on chain. You can also short assets using CEX, centralized exchange like Binance. They provide you with margin to short things, but you lose custody of your own assets. All right. So instead, what we're going to do is we're going to do shorting in a decentralized manner using the wallet that you have. So in front of me is the Ethereum price chart. All right. Uh, Now, as you can see, there's been quite a downfall, and the trend is generally downwards. If you see in the past 1 year, uh, not in the past 1 year, but like if you see the trend from here, it's generally downward. So I realize I want to short Ethereum and make some money. Now, how do I do that on the chain directly, right? So firstly, let's understand what shorting is. It means to sell first and then buy later. All right. Simple trades that we execute is buy first and then sell later. Shorting is sell first and buy later. Now, how do you sell something that you don't own? So the answer to that question is lending. You can borrow assets using protocols and just sell them in the market for any stable coin like DAI or USDC, and once you do and the price falls, you buy the assets back, you return it to the protocol and keep the difference as profit. So one such protocol that I know, which is like one of the biggest protocols, is called Aave. It's spelled as AAVE, aave.com, and this is the liquidity protocol, which is the most famous one. So once we open the website, we click on enter app, and I'm going to be doing this using the Polygon chain. So make sure you select Polygon on this bar over here. Click on Polygon right over here. It says that I'm logged in already, so what I'll do is I'll disconnect first and just show you the whole process. All right, so once if you open it for the first time, it will probably open Aave v2 market. Instead of that, you go to Aave market Polygon. Once you've done that, you click on the connect button, click on browser wallet, and you know the drill, you connect using your wallet. So on Aave, what happens is you first deposit a collateral, and then based on that collateral you take a loan. All right, so now what I'm going to do is I'm going to deposit some of the Matic that I have and use it as collateral so that I can take a loan for Ethereum. So I'm going to deposit, let's say, one Matic. All right, so now based on one Matic, how much loan or how much Ethereum can I take as loan, that number you will find out later. But make sure that you don't over optimize that. Take as little as possible, as little as you can, because in case the markets are volatile, your position will be liquidated, and what that means is your collateral will be sold to buy back the underlying asset, the one that you have taken as loan. So let's do one thing. Let's deposit. Okay, let's deposit some Matic. So for depositing, it shows that I have a wallet balance of 1.10346, which has some basic profit, if you remember from my previous videos. It gives me an APY. It gives basically a 0.79% annual interest on the Matic that I deposit, which is pretty low right now, but I mean, sure. Actually, I also get some reward right now because Aave is promoting itself. So what I will do is I will put down one Matic. Okay, I will deposit one Matic into the protocol. The GUI prices are increasing. Anyway, the transaction has succeeded, and now I've successfully deposited one Matic, And as you can see here, it says can be used as collateral, and it says yes. So I can use this one Matic reserve that I have as collateral. All right, so I'll go to dashboard now, and it says that I have deposited one Matic. Great. I will be using this as collateral. All right, you can figure out all these things, just click on I and all that shit, right? Now I can borrow based on this Matic. The amount that I can borrow, it will show me now, but yeah, I click on borrow now, and I want to borrow with. All right, now available to borrow is a number that you can see over here. All right, so it says I can borrow 0.5 Matic, right? So 50% of the collateral that I've given, only that much amount I can borrow, at least on Polygon markets. Similarly, I can borrow 0.402 Bitcoin, WBTC, Rapid BTC, right? And 0.0029 WETH, and all these have like variable interest rates. So what that means is every day the interest rate will change based on how much liquidity the protocol has, and it might shoot up or down, but you can see that 1.87% interest rate is super low. This is an annual interest rate, and on top of that you get some rewards for borrowing this Ethereum. All right, so let's do that. What I'll do is I'll go to WETH, and I have the limit. I have a maximum limit of 0.292 WETH that I can borrow, but I don't want to, you know, take this complete amount, because it says the risk, my health factor is 1.3, and higher the better. So right now it shows that it's super risky. Okay, so instead of that, what I'm going to do is I'm going to get in a stable zone, which is somewhere around 5. Okay, so now it's pretty safe. Like I can borrow 0.00007586 Ethereum WETH actually. And now what I'll do is I'll borrow this WETH, go to quick swap, sell this WETH for a stable coin, and just hold that stable coin for some period. Okay, once that period is over, once I know the WETH has fallen from my initial WETH sell price, I'll buy it back, and I'll return it back with the interest to the protocol, and we make money, and we make the profits, actually not money, but like we keep the profits in terms of assets. And that is how you short an asset on the protocol. Okay, now obviously I'm working with very small numbers, so it's not going to be anything meaningful, but we'll still go ahead and continue. Okay, so it says what do you want, variable or stable? It doesn't give me an option of stable right now, so I'm going to take variable APY. But on Ethereum markets, Ethereum chain, you will have the option of probably stable for some of these. But anyway, so my new health factor will be 5, and the interest that I'm paying is 1.87% per annum. Okay, on the 14 cents worth of Ethereum that I'm going to borrow. Okay, I press borrow and I complete the transaction again. Alright, so now I have 0.0008 WETH in my wallet, and can I see it? It does not show up, but I can add WETH to my browser wallet by clicking here, and it says add token, and I've added the token. You can see the 0.007586 blah 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 WETH that I've taken, which is similarly 0.0008. Alright, so now what I'll go do is I'll go to quick swap, and I believe we've used quick swap a lot. You can use any other, you can use sushi swap, comet swap, whatever works for you, whatever you like. And then you go here and you'll be like, I want to sell ETH. Okay, and how much ETH do I want to sell? I want to sell the total amount that I have, because I'm shorting ETH. All right, and what I want in return is USDC. So I'm shorting ETH in terms of USDC. Okay, that's what's going on over here. I'm gonna swap ETH for 0.139415 USDC. Now one thing that I want to do is take a screenshot of this rate, so that I can remember later on what was the amount of Ethereum that I borrowed, and is the current rate better or worse. You can check out the screenshot over here, All right, so I've taken the screenshot, and I'm gonna swap now. Confirm swap. And the moment the window, the moment the transaction succeeds, we have sold Ethereum. All right, Ether actually, not Ethereum, wrapped Ether actually, with. Okay, so we have gone and sold WETH in exchange for some amount of USDC that hopefully I can see here now. Yes, so it says 0 WETH and 0.139 USDC. All right, so now that the 0.139 USDC I have received, now I'm going to wait for the ETH rates to fall. It's 1839 USD right now. I think I've sold it off a little at a lower amount. I mean, I could have waited for it to go high and then sold it off. Now let's say for 0.139395 USDC, I am getting 1 Ethereum. All right, like assume the Ethereum prices have fallen through the floor and I'm getting 1 Ethereum back. What I'm going to do is I'll liquidate, I'll buy that Ethereum back by spending my USDC and return the whatever amount Aave needs and keep the rest of my Ethereum, rest of the Ethereum for myself. I can change it back to USDC, you know, just in case I feel like this is a good price. If I don't, I can just keep it in Ethereum and change and swap whenever I want. All this while I control my own crypto. There is not a third party involved. It's all done through protocols. So which is very powerful, right? Like no one can stop you from doing it. There's no KYC involved and it's pretty quick as well. But of course there are pitfalls to sort of, you know, take in. Loan to value is 50%, right? So if the price of Matic falls and one Matic is, let's say, 30 cents and I've deposited one Matic, so I would be very close to liquidation. In case Matic's rate goes to 0.28 cents and the amount of WETH that I've taken is 0.14 cents, it will liquidate. If the value of my loan becomes more than 50% of the value of my collateral, the protocol will liquidate my collateral and I will lose my collateral and the loan is finished and everything, but I lose my collateral. So make sure that, you know, you're keeping an eye on all these things. It's definitely not safe to do it, but yeah, you can still go ahead and do it. One thing though I am dying to show you right now is how do we repay this loan. All right, I'll swap my USDC back for Ethereum. So I go to dashboard and it shows your borrows over here. Now I can borrow a little more if I want, but if not, I can just go and repay maximum of the amount that I have. I'll just approve it once. This is approval just so you know we can take that ERC20 token, and once the approval is done, all right, now I click on repay, confirm. So it says you don't have enough funds to repay the full amount, but I've repaid some amount, right? So my current health factor, which was 4.99, it was 5 earlier, it reduced to 4.99, will now be 2591.48, which is great. I don't need to repay for a long period of time. Anyway, this sort of concludes the whole tutorial on how to short using the protocols on the chain while, you know, holding the custody of your own assets within your own wallet and not relying on any third-party service. Hope this was helpful for you all. Please do leave a comment, help me figure out what should I make a video on next. It really lights up my day when I see a comment from anybody of you, especially, you know, Sumi. Great videos, man. All right, hope to see you next week. Bye bye.